Based on the historical data and forecast, Bitcoin shows a clear downtrend. The recent price action has consistently broken through support levels, and the forecast indicates further declines. The RSI consistently hovers below 50, with significant periods below 30, suggesting an oversold condition, but failing to trigger a strong reversal. The Bollinger Bands are widening, indicating increased volatility and a potential continuation of the downtrend. Considering these factors, I recommend a short selling strategy. We will enter a short position at $70,600, placing a stop loss at $71,000 to protect against a potential short-term bounce. The initial target price will be $68,900, aligning with the forecast. To optimize returns, we will implement a dynamic target strategy. If the price reaches $68,900, we will move the stop loss to the entry price of $70,600, effectively turning the trade into a risk-free position. We will then set a new target price at $72,800, aiming to capitalize on a potential rebound. This approach combines the benefits of trend following with risk management, maximizing potential profits while minimizing potential losses. The portfolio will prioritize this short selling strategy due to the strong bearish signal indicated by the data. Based on the historical data and forecast, Ethereum is currently in a downtrend. The RSI consistently falls below 30, indicating an oversold condition. The forecast for the next week projects a continued decline, with prices dropping to $1,950. Given this bearish outlook, I recommend a short selling strategy. We will enter a short position at $2,390, placing a stop-loss order at $2,450 to limit potential losses if the price unexpectedly reverses. The target price for this trade will be $2,050, aiming to capitalize on the anticipated downward trend. To refine this strategy, we'll incorporate the Bollinger Bands. The price has consistently traded below the lower band for the past 2 weeks, further supporting the bearish view. We will implement a portfolio with a 60% allocation to the short selling strategy described above and a 40% allocation to a conservative strategy. The conservative strategy involves buying Ethereum at $2,280, with a stop loss at $2,230 and a target price of $2,150. This diversified approach combines the potential for high returns from the short selling position with a safety net provided by the conservative long position, aiming to maximize overall portfolio performance while managing risk. Based on the historical data and forecast, BNB exhibits a clear downtrend, particularly evident in the recent forecast prices, which predict a consistent decline. The RSI consistently dips below 30, indicating an oversold condition, while the price continues to trade below the lower Bollinger Band. This confluence of signals suggests a strong bearish momentum. Therefore, I recommend a short position strategy. Entry price should be set at $769, coinciding with the first forecast price. To mitigate potential risk, place a stop-loss order at $865, just above the recent high and the bottom of the Bollinger Bands. A conservative target price would be $674, aligning with the final forecast price. To optimize returns, I suggest a portfolio strategy combining the RSI, Bollinger Bands, and trend analysis. Initiate a short position at $769 with a stop loss at $865. If the price breaks above $865, close the position to prevent losses. The initial target price is $753, based on the recent historical low. However, if the price continues to decline towards the support level of $664, adjust the target price to $674. This strategy leverages the oversold RSI, the bearish trend indicated by the forecast, and the Bollinger Bands to maximize potential gains while minimizing risk. Based on the historical data and forecast, XRP shows a downtrend. The RSI consistently remains below 50, often dipping into oversold territory, particularly between January 31st and February 3rd, with readings as low as 27.5 and 28.0. The forecast for the next week indicates a continuation of this downward trend, with prices predicted to fall from 1.64 to 1.45. Combining this with the Bollinger Bands, which have been widening, suggesting increased volatility and a potential for further price declines, a short strategy is warranted. We will implement a strategy based on RSI and Bollinger Bands, aiming to capitalize on the expected downward movement. Our strategy will involve shorting XRP when the RSI crosses above 30 while the price is below the lower Bollinger Band. Specifically, we will initiate a short position at $1.64. The stop loss will be set just above the upper Bollinger Band at $2.17 to protect against unexpected upward movements. Our initial target price will be the support level of $1.54, offering a conservative profit margin. If the price continues to decline, we will adjust the target price to $1.45, aligning with the forecast. This blended approach, leveraging both RSI and Bollinger Bands, provides a robust framework for managing risk and maximizing potential returns in this volatile market. Based on the historical data and forecast, Solana shows a clear downtrend. The price has been consistently falling, and the forecast for the next week indicates further decline. The RSI consistently dips below 30, confirming an oversold condition, suggesting a potential for a temporary bounce but not a trend reversal. The Bollinger Bands are widening, indicating increasing volatility, with the price consistently below the moving average, reinforcing the bearish outlook. Therefore, a short selling strategy is recommended. We will implement a tiered short selling strategy. Initially, short Solana at $103, with a stop loss placed at $94.8 to protect against a potential bounce. The initial target price is $89.3. If the price hits $89.3, we will move the stop loss to $98.5 and continue to short with an additional entry at $89.3. The final target price will be $86.4. This strategy leverages the downtrend and incorporates risk management through stop-loss adjustments to maximize potential returns while minimizing losses. Based on the historical data and forecast, TRON shows a downtrend with consistent support at $0.279. The RSI consistently falls below 50, indicating weakening momentum. The forecast predicts a continuation of this downward trend, with prices fluctuating between $0.282 and $0.287. Considering these factors, I recommend a short position strategy. We will enter a short position at $0.286, placing a stop-loss order at $0.29 to limit potential losses if the price unexpectedly reverses. The initial target price is $0.275, aiming for a quick profit from the anticipated downward movement. To refine this strategy, we will incorporate the Bollinger Bands. The price consistently trades near the lower band, suggesting potential for further downside. If the price touches the lower Bollinger Band, around $0.282, it strengthens the case for a short position. If the price reaches the target price of $0.275, we will move the stop loss to the entry price of $0.286 to secure profits and reduce risk. This combined RSI and Bollinger Band strategy offers a high probability of success in the current market conditions, balancing risk and reward effectively. Based on the historical data and forecast, Dogecoin shows a downtrend, particularly evident in the recent price action and the projected forecast. The RSI consistently dips below 50, indicating weakening momentum, with several days falling below the oversold level of 20, suggesting potential for a bounce. However, the forecast predicts further decline. The Bollinger Bands are contracting, which often signals a period of consolidation before a breakout. Given these factors, I recommend a contrarian strategy focusing on short-term opportunities. My proposed strategy involves a combination of RSI and Bollinger Band signals. When the price touches the support level of $0.104 and the RSI is below 30, enter a long position at $0.104. Place a stop-loss order slightly below the support level at $0.102 to protect against a further decline. Set a target price at $0.117, near the resistance level, aiming to capitalize on a potential short-term bounce. If the price breaks below the support level of $0.104 and the RSI is below 20, enter a short position at $0.104. Place a stop-loss order slightly above the resistance level at $0.117 to protect against a further increase. Set a target price at $0.0997, aiming to capitalize on a potential short-term decline. This combined approach balances risk and reward, taking advantage of short-term volatility while protecting against significant losses. Based on the historical data and forecast, Cardano demonstrates a clear downtrend. The price has consistently moved below the center of the Bollinger Bands, suggesting bearish momentum. The RSI consistently falls below the 50 level, further confirming the downtrend. The forecast for the next week predicts continued downward movement. Given these factors, I recommend a short selling strategy. We will enter a short position at $0.291. To manage risk, place a stop-loss order at $0.299. The initial target price is set at $0.272, aligning with the forecast price and the lower Bollinger Band. To optimize returns, we'll implement a dynamic strategy. If the price reaches the target of $0.272, we will take partial profits and move the stop-loss to the entry price of $0.291. This protects profits and allows for potential upside if the trend reverses. If the price continues to fall, we will adjust the target price to $0.275. This strategy combines technical indicators and forecast data to maximize potential returns while minimizing risk. The support price of $0.285 will serve as a secondary target if the price continues to decline. Based on the historical data and forecast, Bitcoin Cash shows a declining trend. The RSI consistently dipped below 50, indicating weakening momentum. The forecast for the next week predicts further decline, with prices ranging from $534 to $511. The support price of $507 provides a crucial floor, while the resistance at $537 has proven difficult to breach. Considering these factors, a short selling strategy is recommended. We will enter a short position at $534, placing a stop-loss at $537 to limit potential losses. The initial target price is set at $515, aiming to capitalize on the predicted downward trend. To refine this strategy, we'll incorporate the Bollinger Bands. When the price touches the upper band, it signals a potential shorting opportunity. If the price falls below the lower band, it suggests an oversold condition and a possible bounce. Combining this with the RSI, we will adjust our strategy. If the RSI falls below 30 and the price is near the upper Bollinger Band, we will enter a short position at $534, with a stop-loss at $537 and a target price of $511. This combined approach leverages both momentum and volatility indicators to maximize potential returns while minimizing risk. Based on the historical data and forecast, Wrapped Beacon ETH demonstrates a clear downtrend, particularly pronounced in the recent forecast period. The price has consistently been falling, with support at $1,930 and resistance at $2,580. The RSI consistently remains below 50, with recent values dipping into the oversold territory below 30, suggesting potential for a temporary bounce but not a reversal of the overall trend. The Bollinger Bands are contracting, indicating decreasing volatility and potentially a breakout. Considering these factors, I propose a short selling strategy. Entry price will be $2,590, with a stop-loss placed above the upper Bollinger Band at $3,710 to protect against unexpected upward movements. The initial target price will be $2,330, aligning with the first forecast data point. To refine this strategy, we'll incorporate RSI signals. When the RSI drops below 20, oversold, it indicates a potential short-term bounce. However, given the prevailing downtrend, we'll use this as a temporary opportunity to tighten our stop-loss. If the price reaches $2,590, we initiate a short position. If the RSI rises above 80, overbought, before reaching $2,330, we will close the position and reevaluate. If the price falls to $2,330, we will close the position with a profit. If the price continues to fall, we can adjust our target price to $2,220 and then $2,120, based on the forecast data. This layered approach allows us to capitalize on the downtrend while mitigating risk with strategic stop-loss and target adjustments. Based on the historical data and forecast, Algorand shows a downtrend with significant volatility. The price has been fluctuating around the support level of $0.1, with resistance at $0.107. The RSI indicates oversold conditions at times, with values dipping as low as 32.3, suggesting potential for a bounce. However, the overall trend remains bearish, supported by the forecast prices consistently below recent levels. The Bollinger Bands confirm this volatility, with the price frequently touching the lower band, indicating potential downside pressure. My recommended strategy is a contrarian approach, capitalizing on short-term bounces while managing downside risk. My strategy involves a series of short trades targeting a quick profit. First, I will initiate a short position at $0.106. Given the RSI is approaching oversold levels, I anticipate a slight bounce. I will place a stop-loss order at $0.108 to protect against a false breakout. My initial target price will be $0.104, aiming for a modest profit. If the price retraces to $0.102, I will consider opening another short position with a stop-loss at $0.104 and a target price of $0.101. This layered approach allows for capitalizing on potential bounces while mitigating losses. The overall portfolio will be 60% short Algorand and 40% in cash to manage risk. Based on the historical data and forecast, TRON has been in a downtrend, with the price fluctuating between the support of $1.33 and a resistance of $1.44. The RSI consistently indicates oversold conditions, particularly on February 3, 2026, at 26.8, suggesting a potential rebound. The Bollinger Bands show that the price has been approaching the lower band, further supporting the possibility of a bounce. Considering these factors, I recommend a long position with an entry price of $1.31. To manage risk, set a stop-loss at $1.29, just below the recent low. For the target price, I aim for $1.38, aligning with the resistance level and providing a reasonable profit margin. To refine this strategy, we can incorporate the forecast data. The forecast predicts a slight increase initially, before potentially testing lower levels. Therefore, I suggest a tiered approach. The initial long position at $1.31 with a stop-loss at $1.29 and a target of $1.38. If the price reaches $1.38, consider taking partial profits and placing a trailing stop-loss to protect gains. This combined strategy leverages both the oversold RSI signal and the Bollinger Band's proximity to the lower band, while acknowledging the bearish forecast, providing a balanced risk-reward profile. Based on the historical data and forecast, Cosmos Hub has shown a downtrend. The RSI consistently dipped below 50, reaching a low of 29.5 on January 31, 2026, indicating oversold conditions. The forecast for the next week projects continued downward pressure, with prices ranging from $2.04 to $1.90. Considering these factors, I recommend a short position strategy. Enter a short position at $2.04, placing a stop-loss at $2.1 to protect against unexpected upward movements. The initial target price is $1.91, aligning with the established support level. To refine this strategy, we'll incorporate Bollinger Bands. The price has consistently traded within the bands, and the forecast suggests it will continue to do so. If the price approaches the upper Bollinger Band, consider tightening the stop-loss to $2.08. If the price reaches the support level of $1.91, consider taking partial profits and setting a second target price at $1.85. This layered approach allows us to capitalize on the downtrend while mitigating risk and maximizing potential returns. The portfolio will be 60% short position, 30% RSI strategy, and 10% Bollinger Band strategy. Based on the historical data and forecast, Morpho shows a slightly upward trend with periods of consolidation. The RSI fluctuates between 38.1 and 53.1, indicating neither strong overbought nor oversold conditions consistently. However, the forecast suggests a continued upward trajectory, with prices hovering around 1.21 to 1.24. Considering the support price of 1.21 and the Bollinger Bands, I recommend a moderately bullish strategy. We will implement a strategy based on the RSI, Bollinger Bands, and support and resistance levels. My proposed strategy involves entering a long position when the price touches the support level of $1.21. The entry price will be $1.21. The stop loss will be set just below the lower Bollinger Band, at $1.08, to protect against unexpected downturns. The initial target price will be the resistance level of $1.29, providing a reasonable profit margin. If the price breaks through the resistance, we will move the stop loss to the center of the Bollinger Bands, around $1.23, and adjust the target price to $1.28 to capture further gains. This approach combines technical indicators with key price levels to maximize potential returns while managing risk effectively. Based on the historical data and forecast, Jupiter has shown a volatile trend with periods of both upward and downward movement. The support price consistently remains around $0.186, while the resistance fluctuates around $0.203. The RSI values have generally remained below 80, indicating that the asset is not currently overbought. However, the recent RSI values have been trending upward, suggesting increasing buying pressure. The Bollinger Bands indicate periods of volatility, with the price frequently touching the upper and lower bands. The forecast for the next week predicts a slight downward trend, with prices ranging from $0.191 to $0.181. Considering these factors, a conservative strategy focusing on short-term gains is recommended. My recommended strategy is to implement a combination of RSI and Bollinger Band signals. First, initiate a long position at $0.184 when the RSI falls below 40 and the price touches the lower Bollinger Band. Set a stop-loss order at $0.171 to limit potential losses. The initial target price should be $0.195, aligning with the recent resistance level. If the price reaches this target, consider setting a trailing stop-loss to protect profits. If the price continues to rise, adjust the target price to $0.203, the nearest resistance. This strategy balances risk and reward, capitalizing on potential upward movement while mitigating downside risk with clear stop-loss and target levels. Based on the historical data and forecast, PAX Gold shows a mixed trend with periods of strong upward momentum followed by corrections. The RSI consistently reached overbought levels above 80 in the recent past, suggesting a potential pullback. The forecast indicates a continuation of the upward trend, albeit with some fluctuations. Considering these factors, I propose a strategy that combines RSI and Bollinger Bands for optimal returns. We will implement a buy strategy when the RSI falls below 20, indicating an oversold condition, and the price touches the lower band of the Bollinger Bands. The entry price will be $4,750. The stop loss will be set at $4,620, just above the support level. The initial target price will be $5,120, aligning with the forecast and the upper band of the Bollinger Bands. To further refine the strategy, we will implement a trailing stop-loss mechanism. Once the price reaches $5,120, we will adjust the stop-loss to $5,000. If the price continues to rise, we will further adjust the stop-loss to $4,970. This approach aims to capture maximum profits while minimizing potential losses. The final target price will be $5,220, based on the forecast data. This portfolio combines RSI and Bollinger Bands to maximize returns. The key is to capitalize on temporary dips while benefiting from the overall upward trend. Based on the historical data and forecast, World Liberty Financial shows a clear downtrend. The price has been consistently falling, with the forecast indicating further decline. The support price remains at $0.13, acting as a potential floor. The RSI consistently shows oversold conditions, particularly below 35, suggesting a possible temporary rebound but not a trend reversal. The Bollinger Bands are narrowing, indicating decreasing volatility, and the price is trading near the lower band, reinforcing the bearish outlook. Therefore, I recommend a short selling strategy, capitalizing on the anticipated downward movement. My strategy involves short selling World Liberty Financial at $0.139. The stop loss should be set at $0.146, just above the resistance level, to protect against a potential false breakout. The initial target price is $0.122, aligning with the forecast and the lower Bollinger Band. If the price reaches $0.122, we can reassess the situation. Given the persistent downtrend and oversold RSI, a second target price of $0.121 can be considered, but with a reduced position size. This strategy combines technical indicators and forecast data to maximize potential returns while managing risk effectively. Based on the historical data and forecast, Maple Finance shows a downtrend with increasing volatility. The RSI consistently fluctuates but remains largely below the 50 mark, indicating a bearish sentiment. The forecast predicts a continued decline, potentially reaching $0.285. Considering these factors, I recommend a short position strategy. The entry price should be $0.309, coinciding with the first forecast price. A stop loss should be placed at $0.315, just above the top of the Bollinger Bands to avoid being triggered by short-term volatility. The target price should be $0.288, aligning with the forecast and providing a buffer against potential price reversals. To refine the strategy, we will incorporate RSI and Bollinger Band signals. If the RSI falls below 20, indicating an oversold condition, we will consider covering the short position and potentially initiating a long position. Conversely, if the RSI rises above 80, suggesting an overbought condition, we will maintain the short position. If the price touches the bottom of the Bollinger Bands, we will consider tightening the stop loss to $0.298 to protect profits. This combined approach leverages both trend analysis and short-term technical indicators to maximize returns while mitigating risks. Based on the historical data and forecast, DECRED shows a volatile trend with periods of consolidation and upward movement. The RSI consistently fluctuates around the 50 level, indicating neither strong overbought nor oversold conditions. However, the forecast prices suggest a potential upward trajectory, particularly towards the end of the forecast period. Considering the support price of $18.7 and the resistance price of $20.2, and incorporating the Bollinger Bands, I recommend a strategy that capitalizes on potential upward momentum while managing risk. My proposed strategy involves a long position with an entry price of $19.3. Given the recent price action and the forecast, a stop-loss order should be placed at $18.7 to limit potential losses. The initial target price is set at $20.3, aligning with the forecast and recent resistance levels. If the price reaches $20.3, consider taking partial profits and adjusting the stop loss to break even to protect gains. The RSI readings suggest that the asset is not overbought, supporting the possibility of further upward movement. This strategy aims to capture gains from the predicted upward trend while employing risk management techniques to mitigate potential losses. Based on the historical data and forecast, STAX demonstrates a volatile trend with periods of both decline and recovery. The RSI consistently fluctuates around the midpoint, suggesting neither strong bullish nor bearish momentum. The Bollinger Bands have been widening, indicating increased volatility. The support price has been consistently at $0.283, while the resistance is at $0.395. Considering these factors, I recommend a moderately aggressive strategy focusing on short-term price swings. My strategy involves a combination of RSI and Bollinger Band signals. We will enter a long position when the RSI dips below 35 and the price touches the lower Bollinger Band, aiming to capitalize on potential rebounds. The entry price will be $0.283. A stop loss will be set just below the support level at $0.27 to limit potential losses. The target price will be set at $0.306, based on the recent high and a conservative estimate of upward movement. This strategy aims for a quick profit, leveraging the anticipated volatility and potential for a short-term bounce.